This is an example of utilizing Xlevels as a framework for price delivery and dialing in your entries around higher time frame points of interest in an alignment with an X level. You can see here in the higher time frame, we are at 12% on the daily. This is a higher time frame point of interest because this is where the institutions can step in when price is incredibly bullish to drive price higher. You would only ever enter price inside of a higher time frame premium X level if you had confidence that price is going to range higher. What we could then do is look at 12% and then look on our hourly chart for a PD rate to align with 12% that would support higher prices. Well, we know that the wick is the most sensitive part of an order block. What we'd want to then do is go down to our lower time frame chart and have a look inside that hourly wick to see what do we have on the lower time frame to support that as a PD rate. As we know, time is fractal. So right here we have a piece of balanced price range on the 15-minute chart inside of that wick at 12% on the daily X level. So what I'd be looking to do as a trader, and I'm a turtle soup trader, is I'd be looking to turtle soup that low into this balanced price range to then look to range price back out through the dealing ranges. So one rule with balanced price range is once it tests the low, we don't want to see it go back through mean threshold of BPR. So let's have a look what takes place here. If I press play, you can see that we've come down and we've tested this balanced price range, and we have on this right sided widget our 1 minute dealing range. So this high which put in this low. It's at this point I'd be now looking for price to break structure and move back through the dealing ranges. The principles of Xlevels are as follows. Once you've got down to your nucleus, which is a higher time frame point of interest in alignment with a higher time frame X level, in alignment with a higher time frame PD rate, supported by a lower time frame PD rate, which you have support of a macro 650, 1010. We're now looking for price to go back through the dealing ranges, starting on the 15-second, then the 1, 5, 15, hourly, daily, weekly, monthly. So two rules of price is that we're searching for inefficiencies in liquidity and price. I'm always looking at what inefficiencies do I have inside of a premium which price can respect. This is where I'm looking to take partials. Beyond that, I want to be looking at the 15-minute premium, which is all the way up here for inefficiencies in price. In between the 5 and the 15, we're going to have pools of liquidity above the 5-minute DR high and also the 15-minute high. Our objective is to take price from a higher time frame point of interest X level to a new higher time frame POI. If we range all the way back through this 5, 15, we want to be knowing where we sit on that hourly. In here would be an hourly premium, which is again a new higher time frame point of interest where you could look to go short. Our rules with Xlevels are very simple. We want to be going long inside of a higher time frame discount. We want to be going short inside of a higher time frame premium. So let's press play and see how price plays out. You can see we move up into our 5-minute premium. This is where I want to scale positions. What can happen in a 5-minute premium is that you get offset accumulation, which is where price comes back down into a discount before moving higher. Price comes back down to mean threshold. Now, if you're an inverted fair value gap trader, that would be your inverted fair value gap aligned with an X level to take price higher to go and target a higher time frame premium. However, I'm the turtle soup trader, so I'd be entering in here before the inverted fair value gap. Let's press play and continue. You can see that price just chops around here. Not really doing much, but if you were inside this trade down here, you'd essentially just be relying on the principles of Xlevels, which is take price back up into a higher time frame premium and then the liquidity as you're moving back through the dealing ranges. So you can see here, we're looking for inefficiencies inside of a premium on the 15 in order to take partials. So for me, I know that this is a weak high. I explain why inside of Red Pill University. But also we have this SIBI. This would be an inefficiency in price inside the 15-minute premium where we could look to scale. Ultimately looking to take out the 15-minute high as we move back up into an hourly premium. You can see that we come all the way back up into a higher time frame premium of 79%, which mitigates this range on the high. This would be a sensible place that you could either terminate your trade or you could look to flip short as you now look to drive price back down through the dealing ranges. I hope that gives you an example of how to utilize Xlevels from a higher time frame point of interest in alignment with an X level as you drive price back out through the dealing ranges. Until next time, trade safe, trade smart. Abosh.